Hello and good morning, everyone. Welcome to yet another new week where I will be focusing on the key highlight events that are currently moving markets. We'll be taking an overflow of what happened late last week. Then we'll be looking at the economic calendar, trying to understand the key events to expect this week. And then once we cover this, hopefully everyone will trade from an informed perspective. So remember, this is the Market Snapshot series. It happens Monday to Friday at exactly 11 a.m. So make sure to like and subscribe, set a reminder so that you don't miss a single session. So good morning, Robert Kovale. Thank you for waiting. You can see Smith FX, Thomas Mashuma in the house. Thank you guys for joining. Aaron Kipiego, good morning. Thank you for joining. On Friday, I was away on a day off. So I'll have to inquire with the team why Prudence didn't present on Friday. So let's get things started. So from what you have here, this is the economic calendar. And as you can see, this is as per last week. So we'll try and make the screen bigger. Perfect. So last week, we had quite wholesome activity with the Bank of Canada deciding to hold interest rate steady. We had a big surprise uptick in ADP non-farm payrolls. The Fed decided to hold interest rates steady at 4.5%. Bank of Japan decided to hold interest rates steady at 0.5%. And of course, the main event we had on Friday, that is the non-farm employment change. So everyone was expecting a big number. We were expecting at least 106K jobs created in the month of June, July in the US economy. However, the number we got was much smaller, 73K. But even a bigger surprise is the downward revision on the last two data points, where for the month of June, we had seen 147K, but then this was revised all the way down to 14K. So this was a big surprise in the market, and that explains why we saw the dollar weakening. And of course, we also had US equities dumping hard, while gold at least made some form of recovery. So in this case, the unemployment rate rose to 4.2%, up from 4.1%, and the revisions were the key highlight. So other than that, I don't think there was anything else that was big notable. So if you look at the key highlight from CNBC on Friday last week, non-farm payroll growth totaled 73,000 for July, above the total of 14,000, but below the mega Dow Jones estimate of 100,000. So June and May total are revised sharply lower, down to a combined 258,000 from previous announced levels. So it's more like 258,000 jobs that were reported in the prior 2 months did not actually exist. They were just numbers. So by this revision, it shows that the US labor market is much weaker, and there's a high likelihood that the Fed will be going for a rate cut on the next meeting. So if you look at the chances for a rate cut on the next meeting, so we'll be checking on the CME Fed Watch tool. We had a surprise uptick in probabilities where everybody was expecting that the Fed will not cut rates. Now for the 17th of September, there is a very high probability of 79.7% that the Fed will be going for a rate cut. So on other news, now looking at the economic calendar for this week, we have started with the CPI from Switzerland, which came in at 0.0%, beating estimates of negative 0.2%. So with inflation at zero, of course, the Swiss National Bank will be looking to boost inflation a bit higher, perhaps by investing more in the economy, perhaps quantitative easing or policy easing. But then, other than that, we don't have any other major news for the day. So going forward to Tuesday, we'll be looking at the ISM Services PMI from the US side at 5 p.m. Then on Wednesday, we get the labor market report, the unemployment change, as well as the unemployment rate and labor cost index from New Zealand at 1:45 a.m. Then on Thursday, we get the main event of the week, which is an interested decision by the Bank of England. So here we'll be expecting the Bank of England to go for a 25 basis point rate cut from 4.25% down to 4.0%. Of course, even before we get to Thursday, we should be seeing the UK pound weakening ahead of the official announcement. And then as we approach the end of the week, we'll get the labor market report from Canada. That is both the unemployment change and the unemployment rate before we focus on a CPI and PPI report from China on Saturday. So clearly not a week that is as busy as last week, but still there will be tradable events in between. For instance, we have the crude oil inventories report at 5:30 p.m. on Wednesday. Of course, there will be several Fed members, including Fed member Cook and Daly, speaking over the course of the week. So at least 5 members should be speaking over the course of the week, which would give more clarity on the Fed monetary policy stance. So other than that, I believe those are the key highlights as of this morning. So just trying to check to see if there's anything else we may have missed. Well, the job numbers were strongly contested by the US president. He basically said, in my opinion, today's job numbers were rigged in order to make the Republicans and me look bad. So it's a very contentious issue, the labor market in the US. Trying to see if there's anything else we may have missed as an update this morning. Just a sec. Yes, stocks are quite positive as of this morning. Stock market today, Dow Jones, SP 500, Nasdaq futures climbed with tariffs and jobs data in focus. So, of course, we had the early morning rallies happening as the market seemed to be recovering from the sell-off that we saw last week. So, with this kind of recovery, of course, there will be more companies reporting earnings this week. So we should be more focused, especially on the Nasdaq, with companies such as Palantir expected to be reporting later this week. So other companies that are on the highlights include Eli Lilly as well as Disney. So Disney will also be reporting its earnings later this week. So of course, the labor market report is still very important and impacting prices today. So job market concerns take center stage as earnings season rolls on, and what to watch this week. Of course, there's quite a good number of companies that will be reporting. So other than that, trying to see if there's anything we may have missed. Well, on the Fed members, Trump will be expected to name a new Fed governor. Jobs data ahead in coming days. So from the Office of Statistics, he is expected to appoint one person, and on the Fed committee, he is expected to appoint yet another person, which might give him more impact on the Fed's decisions. So that will be a key developing story this week. So also Citi raises gold forecast to $3,500 per ounce over the next 3 months on negative US outlook. So with the weakness we saw in the jobs data, it created more demand for safe haven assets. So in this case, more likelihood that we see gold retesting its prior all-time high of that 500. So of course, we had a very strong rally last week on Friday. We should be following through to see if that rally will extend later through this week. So oil extends stride as OPEC Plus plans output boost. So oil prices fell for that straight session on Monday after OPEC Plus agreed to raise output by 547,000 barrels per day in September in a bid to reclaim market share amid potential supply disruptions tied to Russia. So Trump has threatened 100% secondary sanctions on buyers of Russian crude, potentially jeopardizing up to up to 2.75 million barrels per day of seaborne exports, mainly to China and India. So clearly, with OPEC expanding oil output, especially for the month of September, there's a good chance that we'll be seeing prices moving further back downwards. However, as of this morning, it seems like Brent has been a bit bullish, but then we'll see as the day progresses. So other than that, I think now we can jump straight to some technical analysis. You can see there was a question to update my display. I'm hoping that you can see it now. Perfect. So this is the MetaTrader 5 trading application, the app that you use for trading. So if you prefer using a smartphone to trade, download the Equity Trader app. So as you can see, the markets have been quite volatile, especially since last week. Notice the big sell-off on Thursday and Friday on the Spanish stock market index, but then today we are seeing a very strong recovery. So if you look at majority of European equity indices after the big sell-off last week, they have opened the week on a positive note. For the Netherlands stock market index, still struggling to make a rally. The Euro Stoxx 50 is doing well, so I expect continuation of the same. The French 40 stock market index also making a good rally. The Norwegian stock market index had a good trip to a key level support, then bounce from there. So of course, we should be expecting more bullishness as we head on with the week. Swiss stock market index opened with a big gap to the lower side. We've just closed the gap, indicating a very strong entry by buyers. Spanish also doing really well in recovering some of the losses from last week. And of course, for the German DAX, also attempting to push even higher. So clearly, it's a day where we see the markets recovering from the big panic selling that we saw last week on Thursday and Friday. So for the UK 100 index, yes, we had a big sell-off on Thursday and Friday, but then today we are seeing more bullishness. And of course, from the last 2 hours, you can see the long tails to the lower side, indicating a rejection of lower prices. So good chance that we continue seeing more upside momentum. For the Japan's stock market index, Nikkei 225 index, after the big sell-off last week, today we are seeing more bullish momentum. So clearly quite a positive market. So on the US side, if you look at the SP 500, after the big sell-off on Thursday and Friday, also making some impressive recovery. Of course, we could first retest the 62.85 price action level. For the US 30 or the Dow Jones, also seems to be quite bullish as of this morning. So clearly, we should be seeing the market retesting this previous support now turned into a resistance. And of course, for the Nasdaq 100 index, we are seeing more bullish momentum. Of course, we should be expecting this to extend further into the day, with key level retest being around 23,000 price action level. So as for oil prices opened with a gap as of this morning. So after opening with a gap, the market closed the gap, and now we are moving further back downwards. So it seems the OPEC news are having the desired effect, where oil prices continue pushing lower. As for gold, I believe we are in some form of consolidation. So if you enjoyed the strong rally in gold last week after the non-farm payrolls report, then you know this is quite normal to see the market consolidating, moving sideways for a while before it makes another break. So we don't have a break yet, so we should be patient enough, monitor this consolidation, and then once you have a break, then you'll have a direction trade. So for USD JPY, when the dollar was weakening last week on the result of the non-farm payrolls, of course, the yen was pretty strong, but now we are seeing some form of pullback. And now, once we breach this area here, a good chance that we see the market extending the rally to a previous high of 148.84. So that now becomes our next target. For pound USD, notice how after making a very strong rally against the US dollar, We didn't make that much of a progress, and now that we're expecting a rate cut from the Bank of England, so good chance that we see the market resuming to prior price action levels. So for Euro USD, also a very strong rally last week on Friday. But then since then, we can't arguably say that there has been much more of a direction. So it's more of a market that is now consolidating or moving sideways. So we should be monitoring that sideways momentum. So for the Australian dollar against USD, there was a very strong rally, and then the market pulled back downwards. And then as of this morning, a very strong rally, but then it seems to be failing each time. So we are at a key level resistance area. So notice how we had a big sell-off last week. This happened across a distance of 4 days. So Monday, Tuesday, Wednesday, Thursday. Monday, Tuesday, Wednesday, Thursday. A very big drop. Then on Friday, a very strong bounce, but it doesn't seem like the Australian dollar has all that much power, and good chance that we could be seeing the market revisiting these areas. So for the Swiss franc, dollar seems to be gaining quite some momentum against the Swiss franc. But then notice that after the big sell-off on Friday, a pullback. Here now we are seeing the market accelerating yet again towards the previous highs. So in this case, there will be some key level targets here. Of course, now that we have bounced clear of this area, now the next target is around 0.81123. So for New Zealand USD, also in some form of consolidation. So I wouldn't say that this market has been directional since the momentum we saw on Friday. So it's more of a wait and see to see if there's some form of break that eventually ends up playing out here. But so far, we don't have a direction yet. We continue monitoring the consolidations. And once we have a breakout, it will be a clear trade. So Bitcoin had a big sell-off, dropping all the way to 112,000 per Bitcoin. Since then, we have seen a very strong bounce, and it seems like it's making some good recovery. So good chance that we see the market retesting 116,000 price action level later this week. So clearly, the dollar index got a taste of 100 for a while last week, but then immediately got a big sell-off on Friday. So today it seems quite like some form of recovery, where the dollar is regaining some of the value it had lost on Friday, but still a pretty weak dollar according to me. If you look at the candlesticks, they are not very showing that confidence of a market that is looking to reverse the entire move from last week Friday. So good chance that we continue seeing the market moving sideways. Key and important asset to be watching will be pound USD, mainly because of that expected interest rate decision by the Bank of England later in the week. So good chance we could be seeing the pound weakening ahead of the official announcement. So a good question, is it advisable to rely on sentiments data to trade during bank holidays? I wouldn't advise that. During bank holidays, markets can be really muted, not moving much, or they can be very volatile because of low liquidity. So as a result, sentiment doesn't work as well. So as always, remember what we say, trade what you see. So regardless of all the analysis you do, remember at the end of the day, what you're trading is that price action. So trade what you see on your chart. Yeah, we already checked pound USD. I believe that was answered. Well, that's it. So thank you very much, everyone. Thank you for your time. Thank you for joining this session. Remember, we have a new episode of the Bullish Banter podcast available for you, and we have more episodes coming in. One of the latest news that we have on the podcast is that we are finally migrating the Bullish Banter podcast away from the FX Pesa channel. So now Bullish Banter will have its own YouTube channel. So hopefully this will help more with the viewing and sharing of the podcast episodes. So far, the most recent episode features the wheelchair king from Kampala, Uganda. So if you want to hear more insights about him and his journey in the market, then make sure to check out the episode on FX Pesa YouTube channel. So that's it for the day. Thank you very much, everyone, and I hope to see you on the next session.